All right. Happy Friday, everybody. Good afternoon, all you magnificent melonheads of the world. Happy Friday, everybody. It's my favorite time of the week, my weekly wrap-up live stream. And guys, this week, how do you wrap up this week? I mean, oh my God, I went crazy this week. I was late with scheduling my Zoom call and everything. There's just so much data came out this week. We had central banks. We had the Fed did nothing, surprising nobody. But then everybody started crying today. How come the Fed didn't cut rates and further inflate my everything bubble? How could you do this to me? Jerome Powell, I thought we were friends. You said we were going to be best buddies forever. Nope, that's gone. And then Japan came over and said, 15 basis point rate hike. Every little tiny, little, very small rate hike. Not so much. That was enough to freak everybody out in Japan. The yen goes surging. Of course, that was partially set in motion weeks ago by the finance ministry intervening in Forex markets, trying to go stop-loss hunting for people who were short the yen. And, of course, big tech earnings. What a freaking joke we got from big tech again this week. And that's what I want to talk to you guys about today. Big tech is now entirely trapped in this cash-burning dumpster fire of AI that is of their own making, and there is no way out for big tech. They have no choice but to continue lighting tens of billions of dollars of their investors' money on fire, quarter in, quarter out, without end. If they stop, everybody loses. And by everybody, I'm talking about us too, guys. This is a $15 trillion AI bubble that we're in now. 15 trillion with a T, pretty big number. Yeah, I get it. It's the 2020s. Trillions get thrown around a lot these days. But holy crap, a $15 trillion stock bubble that they have created. But you know what, guys? This market is not crashing yet. I realize we're watching today and everything looked like mayhem today. Oh my God, it was a bloodbath in markets today. The dollar is falling. Yields are falling. Gold and silver falling despite a weaker dollar and weaker yields. Stocks selling off like the blazes. The NASDAQ down a few hundred points. I was getting messages saying, Jack, are we going to do a spontaneous 1,000-point down in the Dow live stream today? Dogs and cats living together. Mass hysteria. It was a day like that. But you know what? It's not a crash yet. We saw something similar in April. It's a little bit more severe this time around than the correction we saw in April. But you know what stopped it in April? Nvidia earnings. Stopped it dead in its tracks. And the market resumed onward and upward to new all-time highs. There's a very good chance that happens again. Oh my God, did I just say something bullish about Nvidia? Mark the date and time, folks. I think that is clearly the end of the bubble when Jack says something bullish Nvidia. And don't get me wrong, guys, my overall thesis on this company has not changed. I think they are total hucksters over there. I think they're manufacturing their revenue out of thin air. Yes, companies are buying the GPUs, but it is all one big round tripping scheme. We're not going to recreate all of that. But the thing is, the big tech CEOs, they have no choice. They can't stop. Put yourself in the position of a Microsoft CEO, of a Google CEO, Meta CEO, Tesla, any of these guys, all right? All of these big tech CEOs, what is most of their net worth tied up in? Their own company stock, right? All of their value. These guys are billionaires 10 times over now, most of them, because of all the wealth they have in their own company stock. Now, let me ask you this. What happens the second one of them announces that they're cutting back on their CapEx in artificial intelligence? What do you think happens if one of them does this? One Meta, one Amazon, one Microsoft. The others can keep doing it. The second one of them blinks in this game of AI cash-burning chicken that they're all in, they all come crumbling down because this market is now the S&P 1. It is supported by one company and one company only. It is Nvidia. And Nvidia is now too big to fail. Yahoo Finance this morning, saying the quiet part out loud. I saw this article in Yahoo Finance this morning. I almost talked about it on the morning live stream, but there was so much to talk about in the morning live stream. I ran 48 minutes this morning. I usually try to get done in 30. So I decided I was going to build the afternoon stream around this. Yahoo Finance was saying AI CapEx is now too big to fail. Guys, it doesn't matter if AI makes money. It doesn't. We all know that now. AI does not make money. And if you're still one of the AI is going to make all this money people, well, you know what? There are other channels that I'm sure you're really going to enjoy. Thanks for stopping by. If you're looking for confirmation bias, if you're looking for me to support your your bloated tech stock valuations. You're not going to get that here. I have been complaining about this bubble since 60% ago, which also means I've been wrong since 60% ago. All right, I'll wear that on my sleeve. I've gotten this one wrong. But hey, bubbles are funny like that. They inflate and they keep inflating and they get big. And then people say, guys, it's too big. And then they keep getting bigger until finally the idiots who are bidding these share prices up realize or start to ask themselves, what the hell am I buying? A shitty chatbot that tells you to glue your pizzas together? And somebody starts clicking sell. And then they realize, oh, everybody in the world already owns this. And thus there's nobody left to buy it. So who am I going to sell it to? Down goes the price. Well, once these executives once they start cutting their CapEx, it all falls apart, because that means if they stop dumping tens of billions in CapEx of their investors' money, mind you, it's not their money, it's their investors' money. If they stop dumping that in the AI infrastructure, then Nvidia's growth stalls and Nvidia sells off, and it takes the whole entire market with them, along with Microsoft, along with Meta, along with Alphabet, along with Tesla. Nvidia is holding up everything right now, even though Nvidia stock is down pretty sharply also, but we've still got Nvidia earnings to get through. And I have every reason to expect Nvidia earnings are going to be amazing once again. Why? Every single one of these tech CEOs who reported virtually no income from AI, every single one of them said, I'm going to keep spending on AI. And every single one of them said something like, well, everybody else is doing it, so I guess I have to also. So what is this $15 trillion bubble being supported by now? A bunch of tech CEOs who are behaving like the freaking teenage girls at the cool kids table. Oh my God, Jessica, did you see her CapEx? It wasn't even $30 billion this quarter. Oh my God, Becky, I know. Did you see that? She didn't even buy 100,000 GPUs this quarter. That is the mentality of the CFOs and the CEOs in big tech right now. Everybody is buying just because if they stop, they're all screwed. And remember, all these guys, all of their personal wealth is tied up in their company stock, so they can't stop. And so what are they going to do? They're going to keep burning their investors' cash. They're going to keep investing in data centers that there's no real demand for. And once they stop, they're going to keep burning. Once they stop, it all comes to a screeching halt. And so they won't stop. And if you think these guys will stop, even though they know they're lighting their investors' cash on fire, we've all seen it this week, they won't stop. Look at Mark Zuckerberg. Case in point, Zuck still burnt $5 billion on Reality Labs in the most recent quarter. The metaverse is the punchline of a joke now, guys. I mean, can we all at least admit, I get it, AI bros, some of you guys love to poke fun at the CoreWeave story or whatever, but can we all admit at least that the metaverse was a nothing burger, that it was BS? Well, Facebook is still pumping $5 billion a quarter into metaverse. So if Zuck is still pumping $5 billion into a project that has already failed, do you think he's going to stop pumping the money into AI investments? No, they will continue burning their investors' cash until well after everybody has already admitted it's too late. They'll still be doing it because once they stop, their own stocks crash and their own wealth goes up in smoke. These guys can't stop. Frankenstein's monster has now taken over their behavior. The second they cut CapEx spending, their own wealth goes up in smoke, and so they won't do it, which means the market needs to come to its senses. And the market is starting to come to its senses. That means it doesn't matter. One day, maybe Nvidia doesn't post lousy growth. Maybe one day investors say, I don't care what Nvidia's growth is. I know it's all supported by hot air, that it's fake, and that's inevitable. And then they sell off anyway. And then once the incentive to keep burning that investor cash on AI investments is no longer there, maybe then big tech CEOs will stop lighting their investors' money on fire because the market forces them to. Maybe that's this time around, maybe not. But back in April, when we were selling off, Nvidia's earnings was enough to reverse this sell-off. And all the indicators that I've seen from every one of the big tech companies says Nvidia's earnings are going to be awesome again this quarter. They're probably going to guide big again because all of big tech has said we're going to keep pumping cash in. Will that be enough to turn this market sentiment, which today is really in the doldrums? Guys, I just don't know. I don't know, but it could happen. It won't be Nvidia's earnings, though. Nvidia's earnings will not pop this bubble this time around because they're probably going to be fantastic again. And we got all kinds of proof to show to that. Let's shrink my big melon of a head and let's go through the market, guys, because just what a day. What a day it has been. Look at the S&P, down 110 points just off the lows of the day here, down 2.02%. We still got a half hour of trading left in the day, so it could go even lower from here. By the way, guys, I got thunderstorms that are rolling through the neighborhood right now, and my internet has been spotty today. So if I lose you guys, I will try to come back in. I don't care if I need the Jim Cantori standing in front of a Waffle House this bitch. We're going to get through this stream today. But don't be surprised if we see the connection interrupted. Look at the S&P 500 long-term chart here. Since February, I mean, okay, yeah, here's this brutal sell-off. Here's this bloodbath that everybody's hyperventilating about. Oh, my God, how could the Fed not cut my rates? Look what they've done to my stocks. Are you freaking kidding me? Look at what your stocks have done for the last few years, guys. Oh, how the Fed is so late cutting. Are you kidding me? Look at this bubble that we're in. How can you justify cutting rates right now? I get it. Unemployment's rising. I get it. It's already too late to cut. I understand that argument. But look at asset prices here and look at what the average American is going through because of inflation. I don't care if the rate of inflation has come down. The absolute price level is so high, nobody can afford to buy anything. So how do you justify rate cuts, inflationary rate cuts, with stocks doing this and with the average person living like they are right now? It's a damned if you do, damned if you don't scenario. But the S&P, I mean, back on July 16th, the S&P was up here around what, 56, almost 5,700. Now here we are at 53, 400 point sell off in the S&P in a couple of weeks. It's been pretty brutal, folks. Meanwhile, the Dow is down another 690 points today. It was down 900 points at one point when the messages started coming in. Jack, are we going live for a 1,000-point down day? It's been a while since that happened. Looks like we caught a little bit of a bid, though, down only 690 now, 1.7% lower. Interestingly enough, long-term chart of the Dow, we caught a bounce importantly today at that 50-day moving average in the Dow Jones. So a little bit of a technical bounce there, looking pretty good. But even the Dow, right? This time last week, we were talking about the great rotation. Oh, crap. There goes my pad. All right, I'm back. Can you guys hear me? I hope you guys can hear me. Give me a comment if you can hear me. I told you I was going to lose my power. I'm actually I'm using my phone as a hotspot right now, so I don't know how good this stream quality is going to be here. I told you we're going to Jim Cantori this bitch if we have to. Okay, thank you, Jason Warner, for saying yes, I can hear you. Guys, when I lose power, I have a backup generator, but it doesn't stop you from that one blink of an eye that makes everything reboot and I lose the internet connection. So I apologize for that. But thank you guys so much for sticking around here. Okay, so I got some stuff I got to get through here. But real quick, I want to say thank you so much, M&J, for gifting those 10 Nobody Special Finance memberships once again. Second time today. You're so awesome, M&J. Thank you so much for everything you do for the channel. Guys, don't forget to say thank you to M&J. And she says, did you say you got messages from dogs? I don't think I got any messages from dogs. Did I say dogs? I got messages from people today. I don't know. You know what? Things aren't really firing right. It's been kind of a day, kind of a week. And sometimes I'm thinking words and other words come out of my mouth. If I said I got a message from dogs, don't worry. I haven't started talking to canines yet. I talk to Midnight all the time, but no, I haven't gotten any messages from dogs. Thanks again, M&J, for being a member and for supporting the channel. And I got to share my screen here, guys. But you know what? I lost all of my charts. Everything's got to boot up. All the stupid pop-up ads are going to be there again. It's such a pain in the butt when the power goes out midstream. But let's see. We were talking about the okay, you can see it. We were talking about the S&P on the long-term chart. No, we were talking about the long-term chart on the Dow, and I got my little Tyrannosaurus saying no internet. Okay, Dow caught a nice technical bounce here at 39,000. Well, the technical bounce happened at about 39.4. We're at 39.6 right now. So Dow having a pretty lousy day. It's had a really lousy 2 days, a lousy couple of weeks. But remember, we were talking about the great rotation not too long ago. Can you guys still see me? I don't even know. How good is my internet? It looks like, well, my iPad is off, so that's why. Okay, I'm going to turn off the iPad because the iPad is not on the hotspot. Not even going to look at that. So what was I saying? Oh, yeah, the great rotation. Man, I lost my train of thought. Last week, this time, we were talking about the great rotation. I remember saying the great rotation into what? What are we rotating into? What are people buying? And I said, it's not the Dow, maybe small caps a little bit, but small caps aren't doing that good here either. I think, honestly, a lot of money is just going up in smoke. We are rotating from having money into not having money. And I want to say thank you very much to Jose Orozco, who says mini deposit for a UPS system battery backup. Thank you, Jose. That is an awesome thought, and thank you for supporting the channel. And regardless of the UPS, it wouldn't do anything to stop the internet. I lose my internet connection even when the power blinks. Even if I have a UPS, the internet connection still goes down. I am at the mercy of the grid sometimes, and the grid out here in rural PA is notoriously unreliable. Nobody trims any branches around power lines out here. But thank you, Jose, for the good vibes, sir. And thank you to Inflation Situation, says Jack, duct tape and bubble gum. The show must go on. I love it. Duct tape, bubble gum. We'll throw in some vice grips and some WD-40. You can fix anything with that stuff. Thank you so much, Inflation Situation, for supporting the channel. I agree. I like the engineering work there. Marked for time. He says, for your power bill on a plane over the East Coast, and I've got connection. Oh, okay. All right. All right, Mark. I looked up Mark for time. I see you up there. Thank you, smartass, for the power bill. No, I paid the power bill, guy. The grid is unreliable here. But a guy on a plane, he's got a better connection than I do. I guess I need to step up my infrastructure game. I think that's what he's saying here. Thank you very much, guys. I appreciate the joke at my expense. I'll take that. That's fair game. That's fair game here. And the support of the channel. NASDAQ today. Let's look at the NASDAQ here. Again, all my charts are going to reset because of the power outage, and we got all the stupid pop-up ads here. NASDAQ down 435, 2.5% lower. Pretty much right where we opened. We were down over 500 at one point today, so we off the lows here. Still a few minutes left in the day. We'll see where we go. And the long-term chart of the NASDAQ looks just pitiful, guys. Blew right through that 50-day moving average yesterday, heading lower again today. Although we do have a little bit of a wick on this red candle to the bottom here. Was that a bottom we put in intraday? I don't know, guys. But like I said, I'm pretty sure that that Nvidia's earnings are going to be awesome once again, and I'm pretty sure that when that happens, the market's probably going to rally because big tech's still pumping their money into capex. Now, what else are we looking at here? We got to look at the DXY because the dollar was pretty lousy today. By the way, my lights just flickered once again. I hope I don't lose you guys again. U.S. dollar index down 124 basis points today. 103.19. We had a stronger dollar yesterday, but look at this, guys. And this weaker dollar, we have seen stories today like people are now back to pricing in 5 rate cuts this year. Really, guys? There's 3 meetings left in a year. Is it 3 or 2? I think there's 3 meetings left in a year. 5 rate cuts, 6 rate cuts, all these ridiculous projections that we had back in January and February, they're coming back, even though there's only like 3 meetings left in the year. I think Citi was saying 125 basis points of rate cuts for 2024. Guys, there's only 4 months left in the year, 3 meetings. That ain't happening. But everybody's now saying, will the Fed cut 50 or 75? Look, I don't think the Fed is going to cut 50 unless things get a whole hell of a lot worse. If the Fed cuts 50 at the September meeting, that would be them admitting they screwed up. And Fed doesn't like to admit when they screwed up. I mean, how long did it take them to admit that transitory was wrong? They kept using that ridiculous word for how many months? So I wouldn't expect that 50 basis point cut, guys. We're going to get to 25, but 50 right now, I'm going to go ahead and say that's off the table, barring further disaster. Look at this long-term chart. This is USD JPY, by the way. I wanted to show this one also. The yen continued to strengthen today, and it's still strengthening as we speak. 146.5. Watch that yen carry trade, guys. All those people who are short the yen are getting clobbered here, and I wouldn't rule out a Friday news dump. All right, after the market closes, maybe we'll stay live for a couple of minutes and see if we get any announcements because, look, we had a big spike in volatility today. We got big tech is selling off like crazy. We got the yen carry trade unwinding. Those are 3 of the most crowded trades in history. The yen carry trade, short volatility, and piling into big tech for AI mania. All 3 of those trades are in big trouble today. Somebody's got to be blowing up out there. We won't find out about it until after the close. I wouldn't be surprised to get an announcement like that. I don't know who, maybe SoftBank. SoftBank can't be doing good here, but keep an eye out for that one. Also, let's take a look at the bond market again. All my stuff reset, so I don't have anything in the place it needs to be. Son of a gun. It really sucks when the power goes out, guys. I'm not going to lie. Okay, here we go. U.S. bond market. Look at these numbers. Look at the middle of the yield curve. Holy shnikes. The 30-year Treasury down 16 basis points, 4.106. The 10-year's at 3.787, down almost 19 basis points. The 2-year, 3.88, down 28.5 points. 28.5 points on the 2-year. The 210 inversion is 9 basis points now. Say what? 8 basis points now. Oh, my God. Guys, yields are absolutely plummeting. This is a flight to safety trade going on right here. The 1 month at 5.366. Even that one's down a little bit from this morning. And then looking at commodities, you'd think the lower interest rates and the weaker dollar would be good for gold. Nope. Somebody big out there is getting margin called because they're dumping gold too. I don't know why anybody would be dumping gold today. Conditions are perfect for piling into metals right now. But right now we got spot gold is down $10, $2,435 for gold, down about 0.44%. Spot silver down 3 cents, 28.49 for spot silver. We were up 60 cents at one point this morning. Now we're down 0.1%. We got coppers in positive territory, though. September copper futures are up about 0.9%. Platinum's down 1/3%. Palladium's down 1.33%. Crude oil getting clobbered here, down $2.43 for WTI futures in September, 73.89. That's down 3%. Oil is screaming recession here. Let's take a look at the Bitcoin chart here, guys. Bitcoin's having a rough day, too. Oh, we lost the 50-day moving average once again in Bitcoin, down $2,722 on Coinbase at $62,581 here. So Bitcoin not behaving too well, trading like a tech stock once again. Guys, it's been a rough day in markets all around. Pretty much everything is down here today, except bonds. Bonds are doing really well. We've got Atomic Coyote says, don't look at Nikkei futures right now if you scare easily. Oh, thank you so much for the tip, Coyote. All right, let's see what we got. Let's go to, how do we even get to that one? We are going to go to markets, indices, futures, and we got to scroll way down for the Nikkei. There we go. What do we got in Nikkei futures here? Come on, Nikkei futures. Oh, man, I hear the rain pounding outside right now, guys. We're probably going to lose power again. I hope it doesn't happen. Oh, boy, look at the Nikkei future. Holy crap. Another 5.3% on top of the 5% they lost yesterday. Oh, man, somebody Somebody, Coyote, thank you so much for that tip. That was awesome. And thank you for the super chat. Somebody in Japan is definitely blowing up here, guys. Between the strengthening of the yen, the unwind of the carry trade, oh man, and the sell-off in big tech, somebody is in big trouble over in Japan. Atomic Coyote, thank you so much for that tip, guys. By the way, once again, shout out to Michael Gayed, who has been calling this trouble in Japan. It's taken a while to get here, but man, everything he described in his yen carry trade unwind and the global margin call scenario, everything Michael Gayed described is happening right now. I invited Michael to come back on the channel. We are working on a schedule as we speak, so I hope to have him on the channel next week. Looking forward to that conversation. I got a lot of questions for Michael here. Thanks again, Atomic Coyote, and thank you to Blues for Allah says, I am near Allentown, PA. Let's go. Happy Psalm Trigger Day. Yeah, I think our friend Claudia is pretty triggered today. That's for sure, especially because she just traded her credibility for hopes of a position in the next Biden administration so she could go on collecting speaking fees when she retires. How's that going for you now, Claudia? Yeah, full stop. Everybody's much better off than they were a few years ago. By the way, thanks to my neighbor, Blues for Allah from Allentown, PA, right around the corner, brother. All right, thank you very much. And thank you to Jana Williams, who sends the super sticker. I appreciate that. The super stickers don't show up when I put them up on the screen here, and I can't even look. Oh, yeah, my internet came back. I can look on the iPad, see if we can get this thing to load so I can see what it is. No, it's taking its sweet time. Thank you very much, Jana. I appreciate the support of the channel. And thank you to Gomers44, says, Jack, Trump suggesting crypto could wipe out the $35 trillion in debt. Sounds tinfoil hatty. Oh, I never miss an opportunity for merchandising. The debt clock shows at $46 trillion by 2028. Look, I am supportive of Bitcoin. I like Bitcoin. You guys know I like Bitcoin. I buy a little bit every week on the regular, regardless of price action. That's part of a long-term strategy that I don't mess with. The Donald has gone a little bit. He's gone a little bit all in. I'm not surprised to see Orange Man, orange pilling. All right. That doesn't surprise me too much. He's been a little hyperbolic. He's really courting that edgy, young demographic Bitcoin thing. Some of the stuff, like the idea of a strategic Bitcoin reserve, there's things I like about it. There's things I don't like about it. I do think he's gone a little bit overboard on there, but you know what? Moderation waved bye-bye to the DJT a long time ago. So expecting him to be moderate on anything, I guess, is not a reasonable expectation. That's like expecting Kamala to make a coherent thought in a sentence that has a beginning, middle, and an end, you know, subject, predicate, the whole thing that goes into sentences. So yeah, I think we need to temper our expectations for our leadership for the next few years, guys, regardless of who comes out on top. I think the comedians will have ample, fertile soil for their jokes for the foreseeable future, regardless of who wins in the election. No, crypto is not going to wipe out the $35 trillion debt, guys. The only thing that's going to wipe out the $35 trillion debt is going to be a default. And I don't think we're going to default, not anytime soon. We're still making that problem worse before it gets better. So don't hold your breath on that one, Gomers. But thank you so much for the super chat and the support of the channel. And thank you to Chris Haslam, who says, keep up the great work, JG and Melonheads. Thank you so much, Chris. I appreciate the good vibes and the support of the channel. You guys are awesome. You guys stuck with me through a power outage. You sat there and looked at me, probably frozen like Max Headroom, and then the screen went blank. You stuck around. You guys are awesome. I have the greatest viewers on the tubes. Thank you so much. All right, let's move on, shall we? Because we got some stuff to get to. I want to show you this Yahoo Finance article from today, guys, because this would really shape the whole stream. And they're finally admitting this stuff out loud here. Look at the title. Big Tech's AI spending is becoming too big to fail. Not even is becoming. This is not a present tense. It is already too big to fail. And notice what they're saying here, guys. They're not saying AI is too big to fail. They're saying their AI spend is too big to fail. In other words, they're trapped. They can't stop. If they stop, their personal fortunes go down in flames. They have to keep doing it, which means they have to keep losing their investors' money. Keep in mind, this is their shareholders' capital that they're burning. They're burning tens of billions on this CapEx. They're getting no return on it. All right. Their free cash flow is in the toilet, all of them. Their earnings look great, but you can't fake free cash flow. Their free cash flow is going down. All right. So they are trapped. They have to keep wasting money. If they stop, their shares tank. If they keep going, eventually their shares tank. There is no way out for big tech from this AI bubble. This is a mess of their own making. and they're only making it worse, but they're going to keep making it worse. There's a spending frenzy around AI, and this earnings season, we've been getting more details on the pace of that outlay. Meta raised its capital expenditures forecast to the range of $37 billion to $40 billion. Microsoft spent $19 billion last quarter, including server farm leases. Amazon spent $30 billion so far this year and says it'll kick it up a notch to close out 2024. Apple may be zagging, whatever that means. Apparently they should be zigging, but they're zagging. But clearly has a fresh AI focus of its own. And I just heard a very loud crack of thunder. Somebody is trying to tell me something. We've been told that generative AI is the next smartphone, the next internet, a transformational technology. That's why these companies have ramped up spending in a generative AI building arms race. They're spending because they believe in it, of course. But is the spending also influencing that belief? In other words, are they drinking their own Kool-Aid? Are the stakes now so high that even if the promise of generative AI doesn't meet those lofty expectations, these companies and their clients will continue to shoehorn it into products and processes where it's not really needed? In other words, they're saying even after this bubble bursts, even as people start to realize AI is BS, they're still going to keep doing it. They have no choice. History is littered with transformational technologies that didn't quite make the grade. That's what they're saying here, guys. They have to keep spending. They can't stop. And then check out the, oh no, I lost it. Son of a gun. I had this article in the Financial Times from yesterday. I lost the image. Dag nabbit. I can't get it back up on the screen. But let's talk about this one here. This talking point that we got from Mark Zuckerberg here. At this point, I'd rather risk building capacity before it is needed rather than too late, given the long lead times for spinning up new projects. This was Mark Zuckerberg on their conference call when asked about a question about, hey, all of this spending on AI, are you worried about overspending? Are you worried you won't make money off of it? And he's saying the risk of not spending the money is worse. Well, all the other kids are doing it, Mom, so I have to do it. I have to spend way too much money on something that's not going to generate a return for my customers or for my shareholders. I have to keep spending tens of billions of dollars of somebody else's money because if I don't, my stock might go down. That's Mark Zuckerberg, guys. This is $1 trillion company. I mean, Meta shares went up when he said this. He's not saying I'm going to make all this money. He's saying, oh, I can't stop. There's too much risk if I stop. And we got the same thing from Sundar Pichai, Google's CEO, in this article in The Economist. What could kill the $1 trillion artificial intelligence boom? Look at this quote from Sundar Pichai. The risk of underinvesting is dramatically greater than the risk of overinvesting, said Sundar Pichai, the boss of Alphabet, who owns Google. So what is he saying? He's saying we have to. We can't stop. We can't not dump tens of billions of dollars into this money. We don't care if we're losing this money. There's a bigger problem if we stop. I mean, if you're a shareholder in these companies, guys, they're saying we're going to keep lighting your money on fire. We don't have a choice. If they stop, this whole house of cards come crashing down. And man, I really wish I could get that Financial Times snippet up here. Oh, it was perfect. It was freaking perfect. But you know what? The power outage messed with the stream today. Thank you so much, Mark Harcourt. Thank you, Mike. The Har's in your court for the super chat. It came up here. Let me see if I can see what you said. It looks like. Did Mark have anything else to say? No, I don't see anything else from Mark. I'm sorry you got cut off there, Mark, but thank you so much for the support of the channel. I appreciate that very much. I don't know if that was a super sticker or not, but it's not showing through. It really sucks when my computer resets before my stream is done. Son of a gun. All right. Now let's talk some more about some of these businesses, some of these AI businesses. What are these big tech companies investing in? What are they getting for their tens of billions of dollars in data centers? What is actually supporting it? Remember, at the end of the day, guy, it's not about data centers. It's not about how many chips you have. It's about the demand for the use of those chips, right? The demand of the large language models, the demand of people using AI products, which need to rent out those GPUs so that they can generate a return on investment. The whole point is to make money. So let's talk about this one. Presto CEO says the business will survive if delisted. My grandma, how the language around artificial intelligence has changed. Not the new fire, not the new electricity, not Prometheus reborn. No, we'll survive if we're delisted. Wow, that's a pretty dramatic shift. The voice AI company, which went public in 2021, could benefit from a NASDAQ delisting that lets it act more like a startup. Look at it. They really said this, guys. They're actually saying this. The AI company that went public in 2021 could benefit from a NASDAQ delisting. All right. I mean, that's like saying to your wife, look, honey, I know the house burned down. I know all our clothes were destroyed in the fire, but hey, we don't have to do so much laundry anymore. That's what, oh yeah, being delisted. It's really a good thing when you think about it. Now, how's that for putting lipstick on this pig? They're saying it's a good thing that we're about to get booted from the NASDAQ. All right. Presto Automation's CEO predicted that the company would probably be delisted from the NASDAQ stock exchange, but that the move could be beneficial. The company's investors, led by Remus Capital and Cleveland Avenue, have clashed with their secure lender, Metropolitan. In a Monday interview with Restaurant Dive, they're talking about this. Earlier this month, Metropolitan presented the company with a series of options relating to the continuation of its loan forbearance, according to an 8K filed earlier this month. Loan forbearance, which means Presto AI is not paying their debts. This AI company that is creating this next big innovation that's going to put all the teenagers at McDonald's and Taco Bell out of business, they're not paying their debt because this product is so awesome. Is that why? They said the business has strengthened since February when he joined as interim CEO. Red flag. You never want to hear interim CEO. That's almost as bad as co-CEO. When the company told the SEC that liquidity problems raised doubts about its ability to continue as a going concern. Whoa. In other words, this company go bye-bye. Yeah, don't worry. The delisting, it's a good thing. We're not paying our debts, going concerns. But really, it's a good thing. Presto's operations would continue regardless of the outcome of Metropolitan's plan. Now, let's talk about some of the things here. Where was it? Oh, here we go. Talk about lipstick on the pig here. Improvements in the technology are forthcoming. Don't worry, guys. The next big thing, it's always just over the hill. It's just over the horizon. Improvements are forthcoming in drive-through AI that will lead to greater efficiencies and deployment. All right, Presto AI, they do order your fast food with artificial intelligence. It's a chatbot that you order your food through. And this has been dying for months now. In May, the company began adding its pure AI option, which does not have a human monitoring all of its transactions. According to its 10Q for the first quarter, about 54% of its orders required some sort of human oversight, down from 70% earlier this year when Presto's chairman, Krishna Gupta, disclosed to Restaurant Dive that the company uses workers in the Philippines to monitor order accuracy. Guys, it's not an algorithm. It's not AI. It's people in cheap countries, cheap labor, manually performing tasks, and they're telling us it's software doing it. This is the same thing as Amazon's Just Walk Out store. It's fake. It's the freaking, what is it? The Mechanical Turk that my buddy Carl from Internet of Bugs was talking about. It's fake. Now, let's talk more about this Presto AI company. And guys, there are stories like this all over. Here's that 8K that they were talking about, that SEC filing about their debts and their forbearance. Now, let's see what they mentioned in this 8K. What is this company doing to try to save themselves from bankruptcy? Let's zoom in a little bit here. On July 19th, Presto Automation executed and issued to Remus. I got to shrink this a little bit. Executed and issued to Remus Capital, an entity affiliated with Krishna Gupta, a member of the board of directors. That's important. This is their member of their board of directors. His venture capital firm issued them $165 million, or I'm sorry, $1.65 million. All right. And in return, they got a subordinated convertible note with a principal of $1.65 million. All right. So, you know, this guy on their board of directors, he runs a venture capital firm, Remus Capital. He's loaning his own company $1.65 million in exchange for this convertible note that can be converted into company stock. So they're manufacturing money by diluting their shareholders. But look at this, PIK interest. That stands for payment in kind, which means they're not actually making any payments on this debt. They're already in forbearance. Interest on the July note accrues monthly by increasing principal at a rate of 7.5% per annum, and that interest rate shall increase to 12% in the case of an event of a default. Look at what's happening here, guys. So their board of directors guy, the venture capital firm that also sits on the board of directors, is loaning them $1.65 million. In exchange, they're getting company stock or a convertible note for company stock with payment in kind interest. So the company doesn't actually have to make any debt payments. The principal on the debt just gets bigger, and then that debt is converted into equity in the company when they exercise it. In other words, they're just going to keep printing stock out of thin air. That's how they're getting around their liquidity problem. This is just financial engineering, guys. This company is done. They are dead. And by the way, they've had all kinds of problems. This is going back to March. Got to wait for QZ to reload because the internet messed up everything today. Oh, here we go. AI for fast food drive-through isn't going so well. Artificial intelligence might not be the future of drive-through after all. Remember how everybody was going to be put out of jobs because AI is going to take our orders? Well, let's see how that's going here, shall we? Let's see. Where was the article? Here, Del Taco began using Presto AI's voice AI in its drive-through lanes in 2022 and early 2023, said that the technology was exceeding expectations. Okay, so far so good. Del Taco made plans to expand its use of the tech across more than 600 of their restaurants. That sounds great. Now, however, Del Taco has made the decision to stop using the technology at its restaurants. Brakes screeching to a halt. Say what? You told us it was great. It's exceeding expectations. We're going to expand the rollout. And then a day later, we're done. We're out. Presto's technology does use AI voice recognition to take down orders in drive-through lane, but a significant portion of the process still requires an actual employee's involvement as well, on top of the people in the Philippines who are double-checking it. The bot takes down the order from the customer, but it is still the responsibility of the employees to input the order and ensure its accuracy. The voice assistant technology has gone through multiple iterations, but even its most advanced version is still only completing 30% of orders without the help of a human. Other chains such as White Castle and McDonald's have also tested out AI voice recognition in their drive-through lanes. However, from the customer perspective, these new technologies have been a mixed bag. In other words, they suck. When McDonald's first tried out similar tech in one of its drive-through lanes, internet users roasted the bots online for misinterpreting their orders. Presto's AI-powered voice recognition has been the company's flagship offering since its inception, but even its ordering tablets have apparently failed to impress. In the long term, Applebee's, Chili's, and Red Lobster have all confirmed they will not be renewing their contracts with Presto Automation. Look at Presto Automation stock trading at 3 cents. 3 cents. It's a penny stock, guys. This was one of those big AI SPACs, and oh, look what happened. Yikes. Let's look at year to date. Now, let's max out this thing. Okay, this was a $10 stock in April of 2022. Now it's 3 cents. AI, it's coming for your jobs, right? Not so much. Not so much. Thank you very much. JJ Watt says, and sprinkle a little Iranian retaliation to this market volatility. I don't think we've seen anything yet. Have the Iranians actually retaliated? I haven't heard about that. They've said they're going to. Airlines are canceling their flights to Israel as we speak right now. You know what? Like we like to have our wars on Friday after the market closes, so it doesn't impact our financials too much. Talk about desensitized to it. Yeah, that's one more thing we got going for us, guys. You know, World War III, that whole thing is going on. I mean, white swans are the exception at this point, guys. That's pretty much how it works. And thank you very much, JJ Watt. Again, I haven't heard if anything has actually happened yet over there, but that is the kind of stuff. It's the 2020s. Let's not put it past them. Thanks again, JJ. And thanks, Jose Orozco, who says, AI singularity is coming for you, Jack the Thunder. Yeah, maybe that's what that big crash was before. That's the AI strategically shutting power to just my house to shut me up. Is that tinfoil hat enough? Can they do that? Can they just pick one house and shut off the power to that? I know they can't do that, but hey, that fits my tinfoil hat theory. So we're going to embrace that narrative. Thank you, Jose. Appreciate the laugh, brother, and the support of the channel. Steve Voitis says, regarding AI, soon big tech will need to show results. I agree, Steve. Big tech is already being punished for not showing those results. Will it be like when Homer Simpson introduced the Homer? Was that when Microsoft showed up and just bought the company? Was that the big tech when they moved to the big city and Homer was running an internet startup? That was a great episode. I'm still laughing about the Hammock District from that episode. But yeah, soon AI or soon big tech will have to start showing results. And that's already now. Their stocks are already being punished for not showing results. But I think the punishment in those stocks will be worse if they stop the AI cash burn. That's the whole point of the stream here, guys. They are stuck blowing this money until something magic happens. And so far, their investors are punishing them, but the punishment will be even worse because once they stop dumping that money into CapEx, Nvidia's earnings stop outperforming. And when Nvidia crashes, it's going to take Microsoft, Alphabet, Amazon, all of them right down with them. Just as Nvidia dragged this market higher, Nvidia will drag this market lower if and when that happens. But they're going to delay it as long as they can. They'll keep burning that cash. They don't have a choice, Steve. And thanks, Kevin DeBella says, when do I panic sell stocks in my 401k and move it into treasuries? Also got my tinfoil hat, pint glass, and rando shirt on the way. Proud foil wearer. Thank you so much, Kevin. Look, I'll just tell you, I moved my 401k into money markets in April of 2022. All right. So yeah, I sat out this rally. All right. I mean, I've been sitting there earning 5% and change. So I'm fine. I'm comfortable with my risk adjusted return. But I can tell you, we left Gigi's 401k right where it was to hedge against my decision making. So Gigi's 401k rode the market higher. I have been more safely positioned. So today I'm way outperforming Gigi, but for the last year and a half, I haven't. Look, I did really well in 2022 because the market was tanking and I sold out before that massive crash in tech in 2022. Of course, then big tech got together and created this AI bubble out of thin air. And so I sat out the whole rally. Look, guys, I'm not going to tell you what to do in your 401ks. I don't have the piece of paper that lets me do that. And that's not really what I do. I don't want to be telling people what to trade. All I want to do is bring you guys the news, give you my best opinion, and then let you make up your own minds from there. So I stop short of telling people what to do with their own money. I just don't do that, guys. I will occasionally talk about what I'm doing with my own. Right now, I am still in largely cash, gold, silver, and Bitcoin. I own a few stocks, very few, but I sold most of them in April of 2022. So my risk profile is very, very conservative, but I have sat out the AI mania in its entirety. Thank you very much, Kevin. I appreciate that. And thank you, Cole Marsh. Says, huge landslide in Bitcoin in British Columbia to hurt rail traffic across Canada. Didn't we just see this story about a big landslide hurting rail traffic in British Columbia? Or was that Vancouver? There was a story about a year ago that they're saying it was going to disrupt a lot of, was it oil or coal that moved through this one rail line that was taken out by a landslide? Wow, that's another one. I hadn't heard about that one, Cole. So that is going on the homework list for this weekend. Landslide in BC. Come on, pen. There we go. Landslide in BC. All right, I'm going to have to look at that one and see about the rail traffic and, more importantly, what is carried on that rail line. Possible energy mineral disruption there? Entirely plausible. Thanks, Cole. Appreciate the super chat, sir, and the support of the channel. Oh, my goodness, the markets are closed. Let's see how we did into the close. The S&P ended up closing down 101 points, so it caught a bid into the close. I don't know about catching a bid. It closed off the lows of the day. That's the one good thing I can say. Down 101 points on the day. The Dow ended up closing the day down 610 points. Guys, it could have been a whole hell of a lot worse than that. Down 610 points, 1.51% down for the Dow. NASDAQ down 420 points, 2.45%. Also off the lows of the day. All things considered, considering that jobs report, guys, it could have been a whole hell of a lot worse. I mean, a whole hell of a lot worse. All right, we got one more AI story I want to get through, and then we're going to talk about jobs if we have time permitting here. Check out this one in TechCrunch today. Character.ai CEO Noam Shazir returns to Google. We've seen this one again. Another AI startup is flopping, and the founders are bailing and getting hired by big tech. And let me just add, big tech is already getting a lot of antitrust scrutiny for stuff like this, like what Microsoft did with Inflection AI. It looks like Google is now doing the same thing with Character AI. In a big move, Character AI co-founder and CEO Noam Shazir is returning to Google after leaving the company in 2021 to found the Andreessen Horowitz-backed startup. By the way, jokes on them. Couldn't happen to a nicer bunch of guys. In his previous stint, Shazir spearheaded the team of researchers that built Lambda, the large language model for dialogue applications, and a language model that was used for conversational AI tools. Character AI's co-founder Daniel DeFreitas is also joining Google with some other employees from the startup. What do they call this? An acqui-hire, where they basically buy the company just by buying all the talent. Dominic Priscilla, Character AI's general counsel, is becoming an interim CEO at the startup. The company noted that most of the staff is staying at Character AI. Google is also signing a non-exclusive agreement with Character AI to use its tech. Guys, this is the same thing Microsoft did. They hire away all the top talent, effectively killing the company, and then they give them a token amount by licensing the technology so that they don't get sued by what's left of the company, leaving the company and all of their investors hanging high and dry. I guarantee you one day the regulators will be investigating this acqui-hire, this not merger, whatever it is. It's a sleazy thing they're doing. Microsoft did it. Now Google is doing it. And why are they doing it? It might have something to do with this story from about a month ago. No bot is themselves anymore. Character AI users report sudden personality change in their chatbots. It seems like this product was flopping, and so the founders just bailed. They went to work at Google, screwing over their investors. This is a month ago. Users of massively popular AI chatbot platform Character AI are reporting that their bots' personalities have changed, that they aren't responding to romantic role play prompts, gross, and responding curtly, and are not as smart as they formerly were, or are requiring a lot more effort to develop storylines or meaningful responsives. Character AI, which is valued at $1 billion. I wonder how that $1 billion valuation is doing now, Anderson Horowitz. After raising $150 million in a round led by A16Z last year, allows users to create their own characters with personalities and backstories, or choose from a vast library of bots that other people or the company itself has created. And the R Character AI subreddit, where users trade advice and stories related to the chatbot platform, many users are complaining that their bots aren't as good as they used to be. Most say they noticed a change recently in the last few days to weeks. So this company pushed out an update that basically made the product garbage. All their users were complaining. And a month later, the founders and the CEO jump ship along with all the top talent. They go to work at Google. Now the lawyer is the interim CEO with whoever's left over at the company. Guys, we got another AI company is flopping in real time right now. When is this bubble going to burst? It should have burst over a year ago, and it's still inflated. They're blowing harder and harder to keep it inflated, but at some point, they're just going to have to give this one up. Another one bites the dust, guys. All right, let's shift gears a little bit. I want to talk real quick about jobs. All right, we got the jobs data this week. I want to talk about some of these charts. All right, and guys, if you're wondering where are the jobs going, well, let's talk about this. This is table A7 of the non-farms payroll report that just came out today. And, well, not so good here. A7 is employment status of the civilian population by nativity. And that's the thing. Were these people native-born United States citizens, or are they foreign-born living in America? And on table A7, we are looking at the employed people that were foreign-born 16 years and over. All right. Now, this is the change versus a year ago. In July of 2023, there were 29.728 million foreign-born people employed in the United States. And by the way, that number, that's foreign-born, that does include some U.S. citizens. That's an important distinction. We're not talking about just immigrants, just illegal immigrants here. This is foreign-born. There are many foreign-born United States citizens. So this is not a pure immigration statistic. I just want to let you know the labor data does not trace by immigration status, but we do have by foreign-born or native-born. Well, in July of this year, there are now 31.001 million foreign-born employees in the United States. So in the last calendar year, guys, the number of foreign-born people working in the United States has increased by 1.273 million people. Foreign-born people got over 1.25 million jobs in the last year. How are you native-born Americans doing here? Native-born, 16 years and over. The employed population, well, a year ago, it was 132.254 million. And this year, it's 131.037 million. The native-born employed population has fallen by 1.217 million people. in the last year. So guys, if you're wondering, why are wages not rising? If you're wondering, why are they telling us the job market is so good when it is clearly not? Why are they talking to us about the tightness of the labor market as the Fed raises interest rates to try to put more of us out of work to fix the inflation problem that they caused? Well, I'll tell you what's really going on, guys. 1.25 million people were imported into this country to take jobs that were lost by 1.25 people who were born in this country. And this directly benefits the ownership class. And guys, this is not an anti-immigrant talking point. I have worked with immigrants before. They are good, honest, hardworking people who just want better lives for themselves. All right. I'm not trying to. All right. Look, I have biracial children. All right. This is not a race thing. This is an economics thing. They are importing cheap labor, putting American citizens out of work to suppress the increase in wages. And they're telling us it is for our own good. This is freaking criminal what they have done in the job market. It is absolutely criminal. All of the jobs gained in the last year have gone to foreign-born people, while 1.25 million Americans have lost their jobs. Disgusting. That is freaking disgusting. It is inexcusable. And it's got nothing to do with race. You were not elected by people in other countries to serve people in other countries. You are elected by Americans to serve as leaders of Americans. Screw you for doing this to these people. 1.25 million people out of work. That's all right. We're going to import 1.25 million people because they'll come in and they'll work for less. They're creating artificial labor supply. All the while, the Fed is raising interest rates, contributing to the loss of American citizens losing their job. Freaking disgusting. All right. That is freaking disgusting. Every single American citizen should be absolutely outraged by that statistic. And it is not about race. Again, it is not about race. I have no problem with people who just want a better life for themselves. I think it's an admirable quality. I cannot imagine the balls it takes to lift up your whole freaking life, to pack it up and to move to a strange country where you don't even speak the language in the hopes of making a better life for yourself. Good for you if you're willing to do that. But you know what? There's 7 billion people in the world and they can't all live here. They just can't. It's math. And as we say on DNN, math matters. They are screwing American citizens to the benefit of corporate America to fight inflation while the average American is still getting crushed by the price increases that they told us would not happen. Remember, transitory? Screw you for doing this to us. By the way, another thing I want to talk about, guys, Table A9. I usually do this. There wasn't any really exciting data in Table A9 this month, but since I do this every month, I just want to cover it real quick. Full-time workers actually went up in the household survey. We went from 133.236 million to 133.684. So shout out to my buddy Jose Orozco, I believe it was, on the morning live stream, who pointed this out. Up 448,000 full-time workers, but part-time workers, 28.054 million to 27.729. So we lost 325,000 part-time jobs. I'm telling you guys, those part-time jobs are not going to be there much longer. Leisure and hospitality is hurting here. Multiple job holders went up again, 133,000 additional multiple job holders. We now have 8.473 million people in this country working 2 jobs to make ends meet. And again, much like the people who are willing to pick up their whole lives and go to a strange land in the hopes of having a better life for yourself, good on you, those 8.5 million people who got second jobs to make ends meet. Good for you for not taking this lying down, for doing what you got to do to make it work. But it is a freaking crime that you had to do that to begin with. This is a failure of leadership, both politically and economically. This is a failure of leadership across the board in this country. Both parties should be freaking ashamed by what is happening in this job market. And last but not least, self-employed workers, unincorporated, went from 9.681 million to 9.831 million. That's gig workers, guys. We got another 150,000 people are out there driving Ubers or Lyfts, trying to make ends meet. These people are working their butts off. Good for you guys. That is awesome that you're willing to do that. And again, it is a crying shame that you have to do that. We need higher standards, guys. And look, I'm not going to sit here and advocate for one candidate or the other, because both candidates are a freaking joke. Both candidates are going to keep doing what they're doing. They're going to keep doing monetary debasement to make themselves look better. They're going to keep importing people. We need higher standards in leadership. There you go. I'm going to get off the political soapbox here. Anyways, guys, we have been running for an hour now. I apologize again for the power outage, for disrupting the stream. I had a whole bunch of other stuff planned, but we just didn't have the time for it. Thank you so much, everybody, for sticking through this stream the whole time. You guys are really awesome. I am very grateful for that. Thanks for sticking through the freeze and the black screen of power outages and the rain and the angry AI gods who were trying to shut this stream down. But guys, once again, this whole story, I'm not sure this is the market crashing. I'm not sure this is the AI bubble bursting, because every indication are Nvidia's earnings are going to be awesome again. And big tech CEOs are afraid to cut their CapEx, even though they know they're not making money with it. If they stop, their stocks will plummet, and with it, their personal fortunes. And so this charade is going to continue as long as the Nvidia bros keep bidding up the share price. I'm not sure how much longer that's going to last. They are running out of time. Better late than never, guys. All right, everybody. Thanks again for having your Friday afternoon with us here on Melonheads. Thank you so much for all the super chats and the generosity, guys, and for sticking with us through the power outage. Thank you to all my magnanimous Melonheads and channel members on YouTube and on Patreon. You guys are awesome. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.